Gentlemen, good day, and welcome to the Q1FY23 earnings conference call of Oriental Carbon and Chemicals Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akshat Goenka, Promoter and Joint Managing Director of Oriental Carbon and Chemicals Limited. Thank you, and over to you, Mr. Goenka.
Good afternoon and a very warm welcome to everyone. Along with me, I have Mr. Anurag Jain, our CFO, and SGA, our Investor Relation Advisors. Before we begin, I hope you and your loved ones are keeping safe and healthy. We have uploaded our results and investor presentation for the quarter ended 30th June 2022 on the stock exchanges and company website. Hope each one of you had a chance to go through the same. The global economy is witnessing high inflation and supply chain disruptions on account of geopolitical tensions. High energy prices have impacted industries across sectors. Despite the macroeconomic situation, Q1FY23 was a fairly stable quarter for our company. Our company has delivered total income growth of 24% on a quarter-on-quarter basis to rupees 137 crores in Q1. We have witnessed moderately stable demand from both domestic and international markets. Growth in our total income was aided by higher volumes and increased sales realizations. We expect this growth momentum to continue with better demand. We have witnessed some correction in the freight costs in the current quarter, which is Q2. Raw material prices were in increasing trend in Q1 FY23, but we took price hikes during the quarter, which led to some margin correction. Now we are seeing downward correction in sulfur prices happening July onwards, and we expect stabilization in the raw material prices moving ahead. Our team is continuously keeping a watch on costs and taking steps towards controlling it. The ramping up of the new line of IS that we commissioned last year should happen gradually over the next few quarters. We had also commissioned our additional sulfuric acid capacity of 42,000 metric tons per annum, which is also ramping up gradually. The decision on phase 2 of insoluble sulfur expansion shall be taken in the next few months, depending on the offtake growth, demand visibility, and overall market scenario. As mentioned in the last quarter, the operations of the company, which include the chemical business of insoluble sulfur, sulfuric acid, and oleum, would be demerged to another company, OCCL Limited. The demerger process is going smoothly as expected as per timeline. This demerger shall enable the management to focus on pursuing revenue growth expansion opportunities and value unlocking in the respective business verticals in future. Outlook for tire industry remains positive with revival in capex spends for capacity additions. Demand from replacement market, especially commercial vehicles, looks strong. Higher government spending for infrastructure, including plans to expand the national highway network by 25,000 kilometers and improve fleet utilization, shall further increase the demand for commercial vehicles. This indicates improved market sentiment. There has been gradual demand recovery in medium and heavy commercial vehicles, with the transporters reporting high fleet utilization levels on account of road construction projects and also higher consumption of cement for infrastructure projects. There has been a surge in demand for tippers and tractor trailers. Automotive and tire demand shall improve with the expected moderation in inflationary pressures and improved geopolitical sentiments. The performance of our subsidiary business, Duncan Engineering, has also been improving. Duncan reported top-line growth of 51% year-on-year to 16.7 crores in Q1FY23. Our operations are running well and profitability has improved to rupees 2.2 crores in Q1 FY23. Our company believes sustainability is the cornerstone of our business. We have taken initiatives towards waste recycling, water conservation, and steps towards energy saving and reducing our carbon footprint. Our efforts have benefited the company and we have been recognized by global accreditations. We are proud to have been awarded EcoVadis Gold Sustainability Rating again in 2022 and also got recognized as a Responsible Care logo by the Indian Chemical Council. We will continue with our efforts towards our planet, our customers, and community at large. Now I would like to hand over the line to Mr. Anurag Jain to update you on the financial performance of the company. Thank you.
Thank you, Akshat. I will now take you all through the standalone financials of the company. The total income for Q1 FY23 stood at rupees 137.2 crores as compared to rupees 110.8 crores in Q4 FY22, a quarter-on-quarter growth of 24% and stood at rupees 86.5 crores in Q1 FY22, a year-on-year growth of 59%. Growth was on account of high volumes and better realization. EBITDA for Q1 FY23 stood at rupees 27.7 crores as compared to rupees 16.7 crores in Q4 FY22, a growth of 66%, and against Q1 FY22, which was 22.8 crores, a growth of 21%. Margins improved by 510 bps at 20.2% in Q1 FY23. Raw material prices were on increasing trend in April-June 2022 quarter. However, price increases which the company got from their customers has led to improvement in margins. Profit after tax for Q1 FY23 stood at rupees 14 crores as compared to rupees 4.3 crores in Q4 FY2022, a Q1Q growth of 223% and year-on-year growth of 12% against 12.5 crores for Q1 FY2022. PAT margins were up by 630 bps at 10.2% in Q1 FY23. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khetan from Smiths Limited. Please go ahead.
Yeah, thank you for the opportunity. Sir, just a couple of questions from my side. Sir, first, if you can share the industry degrowth figure in FY21. Like in FY20, the industry has degrown by roughly 4%. So similar kind of figures in FY21 and what was the growth in FY22?
Which industry are you talking about?
FY20.
Which industry? When you say industry degrowth, which industry are you talking about?
Insoluble sulfur.
Well, in India, there has not been any degrowth in terms of quantity that we have sold. So, I cannot say that in India there has been any degrowth. The global
degrowth has happened.
Some improvement in some geographies. Hello?
Yes, sir.
If you look at the global figures, so there have been improvement in some geographies. In some geographies, there has been a little downtrend. So, It is very difficult to get the actual figures for last year as to how much insoluble sulfur has grown or degrown in last year.
Okay. But sir, also, so just adding to this only, so have we lost our market share over the last 2 years considering the decline in the global demand? Like I believe that our market share was roughly 20% by
we have not lost market share.
It declined to 10%.
In our reckoning, we have not lost market share.
Okay, so our market share is constant, so that is around 10%.
Yeah. It is in the same range.
Okay. Sir, onto the competitors adding capacity. Inner Sunshine has recently added around 30,000 tons and we had added around 5,500 tons. So as per the demand supply dynamic, so now supply is bit of a surplus as compared to demand. So suppose if we increase the utilization and try to penetrate into the global geographies, so do we have to take take a cut in the realizations considering?
Sir Ketan, your voice is breaking. I would request you to use your handset to ask a question.
Hello.
Please proceed.
Yes, sir. Sir, my question was onto the China Sunshine. So they have added capacity of 30,000 tons and we had added around 5,500 tons. So now supply is bit more of a surplus as compared to demand. So now if we increase the utilization and try to penetrate into the global geography, so do we have to take a cut in the realizations going ahead?
No, I don't think that our penetration into global geographies is strategized on cutting prices.
Okay, so how would be the demand supply dynamics would change, sir, for the next 2 years?
So we do expect that there should be growth in the global market, and it should be more than normal to make up for the degrowth that happened or the zero growth that happened in the last 2 years. So that should be there. Secondly, obviously we are planning to mark our presence in those geographies where our presence is less than what it should be.
Okay. So focus geographies would...
Hello.
Sir Ketan, your voice is breaking. We cannot hear you.
I think let's move to the next question.
I would request you to please rejoin the queue. A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Suresh Jain from NB Investments. Please go ahead.
Good morning and congratulations on good set of numbers. So I have these 2 questions. So the one is my understanding of the insoluble sulfur industry, where based on the prevailing prices, a greenfield expansion, starting a new plant is economically not viable. Is that understanding is correct even under the current prevailing conditions?
Yes, that is our understanding, that in the current scenario, starting a greenfield project is not something which should be economically viable.
Okay. I do not know whether you have this information. The competitor who has come up with 30,000 capacity, is it a greenfield or a brownfield?
It's a brownfield expansion, and even there, it's a multi-product site.
Okay.
So even if it was a greenfield, the insoluble sulfur is just a part of it. It's expansion where they are doing many products, of which one happens to be insoluble sulfur.
Also, they started construction on this when the industry dynamics were much better.
Yes.
It is simply got commissioned now.
Yes.
Okay. So you mean to say if someone has to expand their capacity, so they'll have to look for additional products to commission a greenfield project?
No, I'm not saying that. We are just saying that today it is not viable for a greenfield plant. Brownfield expansion is something which one may look at. Greenfield is not viable.
Okay, sir, but at the same time, from the investor presentation, we are getting information that more and more vehicles are going for radial tires, and radial tires require more of insoluble sulfur, and the demand of insoluble sulfur is expected to maybe 4% or so growth over next few years. So how is this additional demand is going to be met if no one is going for additional?
When we talk about radialization, it is more in the context of the Indian market, because that is where it is happening in commercial vehicles.
Okay.
Second part is when we are even looking at at a growth rate. Today there is surplus capacity in the market, right?
Okay.
So that should be utilized. Third is that if the situation improves, if the margins improve, only then we can look at or somebody can look at greenfield expansions. At current scenario, when we say that the greenfield expansion is not viable, it is always at the current scenario.
I agree. So based on
change later on, right?
Correct. So based on your experience, how much time would it take for this current excess demand to get utilized, so that it becomes viable to put up a greenfield?
I'm sorry, we cannot predict this.
Difficult to say.
Difficult to say. Okay. Thank you very much, sir.
Thank you. If you wish to ask a question, you may press star and 1 now. The next question is from the line of Dhruv Muchal from HDFC Mutual Fund. Please go ahead.
Yes, sir. Thank you so much. Sir, the first question is if you can provide some sense on the capacity utilization for 1Q and some guidance if you can give for the full year, broadly either volumes or capacity utilization.
So we in the current year we are expecting a growth over last year, right? Of over 10% in terms of volume. So we are looking at a capacity utilization of about 75 to 80% this year.
For the full year.
Yeah.
All right. And so is it fair to say, there's some improvement in profitability given the market conditions as you mentioned, but on a per kg basis or per ton basis, what I believe is how the industry works on a largely, the profitability still would be lower and there is still scope of improvement depending upon how the situation evolves, right, sir?
Yeah, that is true.
Yeah, the per metric ton profitability is far lower than
historical averages.
Yeah, even in Q1, it is far lower than what it has been. Even if we don't look at margin and all that, but as you rightly said, we look at the absolute number. It is far lower than what it was.
Sure. And so one question was on sulfur, although relatively small for us, but just from an understanding perspective. So I was looking at prices of sulfur from China. This is sulfur rock, sulfur prices from China and US. So there's a wide divergence. I mean, China prices are significantly higher than probably the US prices. And the opposite is true for sulfuric acid. So US is significantly higher than China prices. So how does the dynamics for us work? What is the right benchmark for us? Just trying to understand, how the RM and probably some selling price for us, fluctuates.
See, the reason that American prices are lower than China is because China is net exporter of sulfur. China is net importer of sulfur, and US is net exporter of sulfur. So for them, there is no freight incidence, but for China, there is a freight incidence which is added to the price. That is the reason why there is a significant difference between sulfur prices in US and China. Same holds for true in the reverse manner for sulfuric acid. There is a whole lot more production of sulfuric acid in China than it is in US. So that is part one of your question. And as far as we are concerned, most of the pricing in Asia, which includes China as well as India, is roughly based on or gets inspiration from the Middle East prices. So what is the FOB Middle East of sulfur? That is the rough benchmark of how the prices prevail over most of Asia and the Mediterranean.
Okay. And the ME prices will be very different than what US and China is, or is it where do they align broadly? I mean, what benchmark would be right for Middle East?
They can be different, though the general trend would be more or less same in the sense when they are increasing, both will be increasing. when they are decreasing, both can be decreasing, but it will be different.
Okay, so
Because
they also work in
of the
different.
geographical this thing, you have Canada sitting over US, which is surplus in sulfur. Then there is America, and the major consumption of sulfur happens in Asia, and the freight from there is high. So that anomaly will always be there.
Okay, got it. And sure, sir. And in the last question, you mentioned about the freight cost declining. And if I understand correctly, this has been one worry earlier because of the higher freight cost, the exports getting a bit impacted. So do you see that improving and probably also aiding to margins going forward? And probably if you can help us, what was the freight cost, say, in some benchmark numbers, what was it earlier? How much has it declined to? And how high are they versus, say, for example, the historical averages for now?
So the freight cost was increasing, and the freight cost in Q1 23 was marginally higher than Q4 22. But now in July onward, we are seeing a declining trend. Now to quantify it is very difficult because in different geographies the trend is different, right? And the impact is mostly on exports. So it would be very difficult for me to predict how much it will impact us overall. But yes, we are seeing correction, and it will help us because that is one cost which we have to absorb when we have to compete in markets outside India.
Got it. And so last quick question is, are there significant IS capacities in Europe? And I'm just wondering, does this gas situation has any influence on these capacities? And do you see that, in some sense helping us?
There is one large plant of our competitor in Europe, but I would not call it. I would not call it European insoluble sulfur capacity a significant player for the rest of the world. It is significant for within Europe.
Okay, so they're mainly for local market. And so, is it possible to quantify what size that would be?
There's no formal data out. I think it would be how much? Around 25,000 tons. I think maybe total insoluble sulfur capacity in Europe could be as much as 30,000.
Okay, got it. Sure, sir. Thank you so much and all the best. Thanks.
Thank you. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. So, sir, sulfur prices in last 1 month have corrected significantly compared to other chemicals. So, do you think this much correction is sustainable in the next couple of quarters, or you expect the sulfur prices to bounce back relatively?
So, you are asking something which is purely opinion. But the kind of fall we have taken, of course, we have seen in sulfur prices is something which after this fall, I think this is a level which could be sustained for some time at least. That would be my reading.
Okay. And sir, on the demand side, particularly on the export geographies, how do you see the next couple of quarters panning out?
So we have got a sustainable demand for a couple of quarters. In fact, our sales in the last quarter was better than the previous quarter, and but however, we should see increasing demand from Q3 onwards, or supply and export. We are expecting that we should see a bump up from Q3 onwards.
Okay, sir. Okay. Thank you very much. That's it from my side.
Thank you. Reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Anjana Shah from Shah Investments. Please go ahead. Ms. Shah, I have unmuted your line. Please proceed with your question.
Yes, ma'am. Thank you for this opportunity, sir. A couple of questions from my end. Firstly, sir, I would want to know, how the raw material prices have been. Like, they've been on an increasing trend over last few months. So what is the current price of sulfur and coating oil? Also, how do you think this trend would be going ahead?
So if you look at the June quarter, that was the highest price, and in the month of July, the prices, the raw material price were equal to what was there in June. But August onward, they should come roughly to the level of Q4FY22. And I'm talking about raw material prices as a whole, right?
Yes, sir.
So we are expecting them to be marginally higher than Q422 currently, if you look at August.
Sure, sir. That helps. Also, sir, if you could tell me what are the freight costs of the company for the current quarter?
No, for the current quarter, it is dynamic. It will be very difficult for me to.
So, have we seen any moderation in the cost, sir?
Yes, we have seen moderation in the current quarter in the costs.
All right. So, if you could provide some percentage breakup of regular trade, high stability grade, and special grade of insoluble sulfur sold.
No, that is
from which
no.
From which grade
type? So many grades, it's not possible to give you that breakup of regular grade versus this.
Okay. So then, could you just tell us which grade type do we usually have a higher demand?
All grades, depending on the geographies, have their own demand, So in certain geographies, certain grades have demand, and the others have demand.
All right. Sure, sir. Thank you. That was really helpful.
Thank you. Before we take the next question, a reminder to all the participants to press star and 1. The next question is from the line of Aditya Khetan from Smiths Limited. Please go ahead.
Ma'am, is my voice audible now?
Yes, please proceed.
Yes. Sir, my question is on the recently expanded 5,500 tons per annum capacity. So can we expect it to reach the peak utilization by this fiscal end, or will it take by roughly H1FY24 also, considering the demand is a bit less as compared to supply?
So what currently we are looking at is that we should achieve optimum capacity utilization next year.
So you're saying so by this fiscal end, FY23 we can reach that?
FY23-24.
Okay, 24 you're talking. Okay.
Yeah, FY23-24.
Okay. Sir, onto the situation into the Europe front. So now we are witnessing that the gas supply cut from Russia in Europe has been intensified. So are you getting any increased order and inquiries from Europe, considering if there is a significant gas cut? Is there an opportunity to increase export to Europe market?
No, there is no connection. So gas cut has no connection to supply of insoluble sulfur. The good thing is that we have not yet seen any de-acceleration in demand there.
Okay, but the supply has been impacted. Is there any news on that front, like you have witnessed over the past month?
That we have not seen any de-acceleration in demand as yet from there.
Okay. Onto the supply side also, so there wouldn't be anything. That point wanted to clarify.
Supply side means?
Means the local manufacturers, so they are not cutting down on supply.
It's very difficult to predict, how this gas and oil will affect our competitors. I don't want to comment on it.
Okay. Sir, what would be our assumption on the margins and growth roughly for the next 3 years, if we can quantify something?
No, we cannot quantify.
Okay, sure, sir. Thank you, sir.
Thank you. You may press star and 1 to ask a question. The next question is from the line of Raj Vaswani from Athena Investment Advisors. Please go ahead.
Hello. Yeah, thank you for the opportunity. So, a couple of questions from my end. Firstly, I would like to know, you mentioned that we have taken a hike in realizations. So, could you kindly quantify, like a ballpark figure, what's the percentage hike on a Q-on-Q basis?
No, we do not disclose our selling prices, but I can say that in spite of increased prices from Q4 of last year to Q1 of this year, increase in raw material costs, our margins have improved over the absolute minimum margins that we got in Q4 FY22. So we have been able to increase our margins, albeit they are still very short of the optimum margins that we had earlier, and that is reflected in the results. So
fair enough.
When we talk with our customers, we have told them, look, these are the raw material increases. They have listened to us sympathetically and given us price increases in Q1 of this year and Q2 of this year as well.
Okay, and on the volume front, what would be the percentage increase roughly?
From which quarter?
Quarter-on-quarter basis, June quarter. Ballpark figure would also do, roughly.
So between 20 to 25% increase.
Okay. And what would be our current capacity utilization number, roughly speaking?
I'm sorry. I need to correct myself.
Sure.
I got it from the previous quarter. You're talking about the trailing quarter, right?
Yeah, correct.
So I got it from previous quarter. So that would be around 12%.
Okay. And what would be our capacity utilization, roughly speaking?
No, I mean, you want to increase your capacity to get the quantity. We do not disclose that.
Okay, fair enough. And roughly speaking, what will be our current cash position?
As on so when you want you what do you mean by cash position?
Cash on books, balance sheet, as on June 22.
So it's a comfortable position. As on 31st March, I had 80 crore rupees in debt and liquid funds, and another 32 crore in corporate deposits. So that was the position as on 31st March. About 112 crores.
Okay. And has there been any increase in debt also, like any significant increase?
No, there has been no increase in debt. It is at the same level as it was on 31st March, in spite of increase in working capital loans because of the repayment of long-term loans. The overall debt position remains the same.
Okay. And if you could please quantify, like roughly speaking, what percentage of the increase in top line has come from credit sales and what is cash? Like what I'm trying to get to is how much has our accounts receivable gone up roughly?
So most of my insoluble sulfur sales, not most, all of my insoluble sulfur is credit sales. 95, 97, 98% of it.
Okay, got it. My last question would be like, from a 3 to 5 year perspective, what's the game plan of the company? Like, where do you see the majority of the growth coming from? And what would be our decisions taken on the capital allocation front? Like, would there be any sorts of buyback coming forward? Because given that now only phase 2 capex is remaining, so I believe the company would be flush with cash.
So let me answer it in two. The first one is that we are looking at a very good growth in the domestic market. So that is there, and international market also we are looking at new geographies. So we are looking at growth from both domestic as well as international market. To your second point, I think you know that we have already gone for demerger.
Correct.
So our investments, etc., will be there in the demerged company.
Okay. So any buyback on the cards so far?
So you know that is something we will look after once demerger happens, and of course you know that in demerger we are also splitting the shares from 10 rupees to 2 rupees.
Correct.
Yeah.
And you mentioned we will be expanding in new geographies. So will this be in the existing products, or do we plan to get into any new product line like?
We are talking about insoluble sulfur, existing products.
Okay, fair enough. That's all from my side. Thanks a lot.
Thank you. Participants may press star and one to ask a question. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, congratulations on a good set of numbers in challenging circumstances. I would like to know that the other expenses part, if I'm not wrong, includes the power and fuel expenses.
There's the power and fuel, freight, and packing. So these are the three major heads which are included in other expenses. Yes.
Right. So that other expenses saw some increase when compared with Q3 FY22 to Q4 FY22, and now from Q4 FY22, which was 40 crores, it is now around 45 crores. So if you could, so if the freight part of it has seen some relaxation in terms of pricing, can you tell me how much of an energy cost escalation have we seen on quarter?
So let me correct you. The freight relaxation that we are seeing is in the current quarter. That is from July onward.
Oh, okay.
In the last quarter, there was a marginal increase in freight, not decrease. So there was an increase in freight in last quarter versus the trailing quarter. And the increase and the overall increase that you see in other expenses over the trailing quarter is because of increase in these costs. So there is energy and freight and packing.
So energy cost also saw some increase from quarter 4 to quarter 1, right?
Yes, they also saw an increase on a per ton basis. Overall, of course, there was an increase because there was a production was higher.
That is the increase in volume. That is understandable. And what is the state of energy cost as in July, as the month has already passed by? So per ton, is there still an increase in energy cost, or it is stable?
There has no. It has been from June to July. There has not been any significant increase. It has been more or less stable.
Okay, marginal or stable? Marginal increase or stable per ton, right?
Yes.
Okay. And sir, the price. So if I'm not wrong, in Q4 you had told there was no price hike taken, or it was dependent on more on international markets. So the price hike that have been taken in Q1. If I'm not, I actually was late for the call. So I'm assuming that there was some price hike taken in Q1, right?
Yes, we did take a price increase in Q1, and that is why, in spite of increase in our input costs, our margins improved from Q4 FY22.
Right. And any hike taken in month of July as such?
Yes. We have.
Another round of hike has been taken in July, right?
Yes.
Yeah. Okay. That's all from my side.
Clarify one thing on this price hike. We should not take Q4 as a base for any kind of a performance analysis of the company. So from historic standards, our margins are still much lower on absolute terms, as I outlined before. So we should not look at this on a quarter-on-quarter basis and start comparing with Q4.
No. It was just sir, only on the cost part. I wanted to understand if the per ton cost has increased. Performance
making a general comment. I'm just taking the opportunity to make a general comment that Q4 performance actually we should not factor in while analyzing our company, and it should be treated as an anomaly quarter. So overall performance, we are still far behind where we should be.
Right. Yeah, thank you. That's all from my side.
Thank you.
Thank you. The next question is from the line of Atul Kothari from Progress Innovations Private Limited. Please go ahead.
Thank you, sir, for the opportunity. Sir, I have a couple of questions. So first of all, what is the scenario on the supply side for insoluble sulfur? Any scenario on the supply side for insoluble sulfur? Are there any new capacities coming up globally?
So there are some capacities which have been added, and the capacities are more than demand. We are not aware currently of any further addition of capacities which are in pipeline.
Okay, sir. And sir, has our competition taken any price increase?
So, I think we have mentioned this earlier also, because of unprecedented increase in raw materials, everybody has had to go and take a price increase, right?
Okay. And sir, it is by approximate how much percentage?
No, that varies from geographies to geographies. So I will not be at a liberty to disclose that.
Not an issue, sir. Sir, with North America being our target market, so how is the demand traction from North America has been? And secondly, have you added any new customers?
We are on track to achieve our targeted sales by the year end from North America.
And sir, have you added any new customers there?
So it's basically new plants. So there are global tire companies and they have plants in America as well. So most of the sales comes from approval from their plants in the US. So the customers remain the same, but they have plants in US as well, right?
And sir, lastly, sir, the capacity expansion of sulfuric acid for 42,000 tons has been completed, and the commissioning of the capacity started from 18th April onwards, if I'm not wrong. Yes. So, can we expect this line to fully ramp up by FY23?
Yes, we should expect it to be fully ramped up by FY23.
And sir, what would be the revenue potential from this line for FY23?
What should be?
What should be the revenue potential for FY23?
The revenue potential is very, very misleading in case of sulfuric acid, because it works on a raw material plus basis. For example, if sulfur prices were say 40,000 rupees, the revenue could be 15,000 rupees per metric ton. Now, if sulfur prices come to 10,000 rupees, the revenue could come down to 6,000 rupees per metric ton.
Okay. So, but at current prices, how much revenue can we expect in FY23?
Correct way to give the revenue potential,
Okay, sir. And sir, the products which will be manufactured from this line, they would basically cater to which regions domestically?
Which line?
The products which are manufactured from this line of sulfuric acid of 42,000 tons.
Yes.
It would cater to which regions domestically?
No, the region is going to remain the same as earlier. So that's North India.
Okay, sir.
Yeah.
Okay.
The region is.
Thank you very much. Okay, sir. Thank you very much, sir. That's all from mine.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Sarang Doshi from Interest Capital. Please go ahead.
Hi. Firstly, thank you so much for the opportunity. So I have two questions.
Mr. Doshi, there is a lot of disturbance from your background. I would request you to go to quite a place and talk, please.
Hello.
Mr. Doshi, there is a disturbance.
Hello, is it better
from your
now?
line.
Is it better now?
Yes, please proceed.
Yeah. Firstly, thank you so much for the opportunity. I have three questions. One is, currently the industry is going through a very difficult times. I mean, there is supply surplus, freight costs, raw material costs are on the higher side. So I just want your view. You said from Q3 onwards there will be a robust demand on the export and domestic front. So how do you see dynamics shifting? You see dynamics shifting in terms of demand from FY24 onwards?
So what I said was that Q3 onward, our export sales should increase, and that is because we should be starting exports to newer customers Q3 onwards.
Okay.
The demand scenario is something which is going to unfold as it is going to unfold, at the percentages it's going to unfold. So these are two not entirely related to increase in demand.
Understood. Thank you. My second question is, our normalized gross margin, historically, if I check, is around 70 to 72%, and currently it is around 60-62%. So you see, with moderation in commodity prices in FY24, we can attain those levels of gross margin.
I don't think we will be able to attain fully our historical margin in this year. Though we might see a little improvement if the commodity prices help us, but achieving them fully is something which looks difficult at this point.
Okay. Understood. And thirdly, sir, regarding the demerger process, sir, I'm not able to fully understand. Just I want some clarity on, regarding the cash and cash equivalent. So you said in the coming months we will get some more clarity. But if you can throw some light on how much portion, how much cash will be reflected in the chemical division?
No, that is something we cannot predict as of today. That is something which will be decided at the time of demerger. What is the requirement of each business? Accordingly, it will be decided.
Okay. And how much would be our, target dividend payout, sir? If you have anything in mind, you can share.
Yeah, we have a dividend policy that says that 60% of our PAT subject to a ceiling of our free cash flow for the year. So we are committed to that.
Great. Okay, that's it from my side. Thank you.
Policy is on the website, so you can read it over there. We'll be following that policy.
Okay. Thank you so much. Thank you.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. Akshat Goenka for closing comments.
I take this opportunity to thank everyone for joining on the call. I hope we have been able to address all your queries. For any further information, kindly reach out to us or Strategic Growth Advisor, our investor relation advisors. Thank you once again.
Thank you.
Thank you. On behalf of Oriental Carbon and Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.